I think we are good to start. Okay. Hello, everybody, and it's 4 o'clock here in Saudi Arabia. There are people from different time zones who have joined us. Everybody's at home for sure, and everybody's going through this difficult time altogether. So I hope all of you are safe. And thank you for joining us in this webinar. This webinar is on the topic of blockchain and how it is impacting the domain of insurance. So whenever we have any domain being impacted by technology or by applied technology, it gives rise to a different domain. For example, insurance, if it is impacted by applied technology, it has evolved into InsurTech, which we will explain in upcoming slides. Finance, when financial institutions have used the application of technology, it has given rise to fintech. When technological institutions have been offering financial services, they are termed as techfin. So these are different domains that are evolving along with tech. Tech is basically the catalyst that is evolving the different sectors in its different times. So it's me. My name is Mohammed Nakib, and I'm joined by my co-presenter Sunil. Sunil, hi.
Hi.
Sunil is joining from India. I'm here in Riyadh, Saudi Arabia. Sunil is he's a blockchain practice lead, and he's a chief technical blockchain architect in one of the biggest insurance companies. I myself, I'm a business architect, and I work as the head of technology for IIIBF Net, where I'm responsible for transforming this e-learning company into a complete financial products and services portfolio. So I think it's good enough. We can start. Okay, so let's do a little history lesson. Insurance has been in place since long time, since the recording of history. We have trade recordings between different civilizations at different times. The first recorded insurance was basically by a Babylonian king called King Hammurabi, as we see, and this was like around in 1715 BC. Okay, so this was a trade agreement between the Chinese counterparts and the Babylonian civilization. And the image that we see on the screen is basically called the Code of Hammurabi. This is the first discovered and documented insurance policy that we have in history. Okay, so this has evolved over the ages, and it has gone through different types and different areas. Usually, insurance has been covered for marine trades, where civilizations, because in the olden days, usually the trade was done through sea and very less through the land route. And because there was no technology, people used to lose a lot of their wealth during the sea travels. So this gave rise to insurance policies, which basically divided into different areas and different domains that we'll see in the next slide. Okay, so basically the first insurance, the modern insurance that we see today happened in the year of 1732. It happened in the year of 1666 during the Great Fire of London, where there was a heavy loss of property in the London. And after that, there was this company in London that gave rise to the modern insurance law as we see today. But then again, it took almost 100 years for the insurance policies to travel across globe, and the first insurance that reached America was in the year of 1732, and a company called Travelers Insurance Company started including technology into insurance. They bought the first IBM mainframe computers, which basically is, as per the recorded history we have, this is the first usage of tech in the insurance sector. But then again, the invoicing and accounting that that we see today was basically all on the papers. It was all paper things, but it moved to computers in the year of 1980s, and gradually we had the internet boom and the usage of different technologies. And with the adoption of the emerging technologies like AI and IoT came the need of ensuring things, because usually before we used to insure products, now we are ensuring things. So yeah, so with the change of internet technology and the addition of the things into our economy, there has come the need of involving different insurance policies. Okay. So with these came the use of with different technologies. Now we will talk about Takaful. Takaful is basically termed as insurance, Islamic insurance. It is basically cooperative insurance. Okay, so during the time of the Holy Prophet, dating back to the 2nd century, there was this system called Al-Aqila, where the community used to take care of the blood money. For example, there has been an accidental death of somebody, so the amount that was fixed for this accidental death by the person who actually caused the accident was around 100 camels. So 100 camels is a big amount of money then and even now. Okay. So what happened was that the community used to pool in money, and they used to take care of this big amount. So Islamic insurance basically differs from conventional insurance in many ways. One of the major differences is that it prohibits the usage of interest. In the next slide, we will see like how what is the basically difference between a conventional insurance and an Islamic insurance. Okay. So Islamic insurance is basically termed as Takaful Tawuni, or the cooperative insurance as we call it. Cooperative insurance exists even today on the conventional form, but then again there is a slight difference of rulings on a Islamic cooperative insurance and a normal cooperative insurance and a conventional insurance. So here in this slide, when we talk about cooperative insurance, we mean the Islamic insurance. Okay, so conventional insurance is basically based on the profit motive, in which the idea is to have maximum returns to the shareholders. But in cooperative insurance, the idea is that it is a non-profit based of insurance, and it is owned by the policy holders of the operator company. But in conventional insurance, on the other hand, it is owned by the shareholders of the insurance company. Okay, and in conventional insurance also, as we can see, that the insurance profits include the underwriting surplus, which is the difference between the total premium received and from the total claims and the benefits paid to the policy holders. We will not go into deep details of what each of this mean, because now we are not like in an insurance class. We can have a detailed session about the policies of insurance maybe in a different seminar. The scope of the seminar is to ensure on the fact that how the technology aspect has been impacting the sector, which we will be covering in detail on the upcoming slides. So here, like in this slide, I'll just give a basic difference between the conventional and the cooperative insurance. So as we can see that the conventional in the conventional insurance, the investment of premiums involves the interest. As I said in my previous slide, Islamic insurance completely prohibits the usage of interest. And this is where the difference of the major difference comes between both the insurance systems. We can move to the next slide. So here we will introduce InsurTech, and we'll have Sunil who will be talking about how in the technology domains and the technology aspects have been impacting in the area of insurance, and how it has been being dealt in the current system.
Thank you very much, Nakib, and thank you for the great introduction, uh, and thank you for having me here, and thank you for all the participants who dialed in from different parts of the world. And I also would like to thank the organizers of this webinar, International Institute of Islamic Business and Finance. Okay, so now the topic here is InsurTech, and as the name suggests, it combines two words, insurance and technology. We know that insurance as an industry, like many other industries, are using technology for a long time. And we know that now the electronic data processing, which is an IT department for most of the industry, started 40, 50 years back. Then why all of a sudden we are talking about InsurTech as a buzzword? The reason is, in the past, uh, most of the enterprises has been using the technology as an enabler or as a facilitator to support the business strategy. But now the change is IT is a strategy. I see IT is the business strategy. IT is driving the business strategy. So you cannot really distinguish between the business strategy and IT strategy. That's the importance. And in that context, there are a number of new technologies that are challenging how conventional insurance is sold, how conventional insurance is managed. And in this context, we should look at, we will try to define InsurTech. So in fact, there is no standard definition for InsurTech, but the definition that I like is it's an ecosystem of technologies that changes the creation and distribution as well as administration of insurance products by taking advantage of the changing customer expectations as well as preferences. Here, the keyword as we see is ecosystem of technology. So it's not just about one technology, but it's about convergence of a number of technologies like AI, IoT, big data, analytics, etc. And then it's also about taking into consideration how consumer expectation and their preferences are changing. Okay, when it comes to a domain like insurance, and this has led to a number of new different types of insurance products. Like example, insurance on demand, pay as you go insurance, or micro insurance, etc. And again, as I said before, different new technologies have enabled the insurance companies to look at data in a different way, or a way that has not possible before. And it enables them to connect to the customer better. It enables them to understand the customer preferences better. And it also equipped them to understand correlations that is not practically possible in the past. Now, but having said that, we cannot think that now this is putting the conventional insurance companies at a serious disadvantage. They got their own strengths. And in fact, unlike many other industries, insurance industry is a heavily regulated industry in all the parts of the world, in different parts of the world. Uh, and it's for a good reason. And we know that these technology companies and startups, they won't consider working with the regulators as their strongest point. At the same time, most of the big insurance companies got global presence as well as they are financially very well equipped. But there are some unique advantages for the startups or as well as the insurtech companies as well. For example, they rely on technology too much, and they are by default digital organization. They follow a very lean operational model, and they consider technologies like data analytics, blockchain, etc. as their core competencies. And because they are lean and because they are small, they are better equipped to respond to the changes in the market. And this is something that I consider as a major advantage compared to established companies. So if you can associate an established insurance company to the stability of a cruise ship, a startup in the insure field, we will be able to offer the agility of a cruise boat, of a speedboat. Now, I don't personally believe that in future all the established insurance companies are going to get replaced by new startups in the insurance field. But what is likely to happen is going to be a synergy between these two, and we will be able to see a lot of synergy in future. And as you can see in the slide, if these two can coexist, that's going to create a very successful insurance industry in future. Now, with that, we are moving to the next slide, and here we are trying to understand what makes insurance as a business ripe for disruption. And the definition of the word disruption here is significant change in the way a particular business is operated, transacted, as well as given value to consumers. And we already know from Nakib that insurance industry is an old industry, and it's there for the last 300, 400 years in its present form itself. At the same time, it's very big industry as well. If you consider the gross written premium, which is an indicator of the size of the industry, it's close to $5 trillion in a year across the world. So it's actually quite big. The second point is it is a heavily regulated industry. As we already know, there are different bodies that regulate this industry in different parts of the world, again for good reasons. And because of that, there is a lot of friction to change as well. And we haven't seen the impact of new technology companies like in many other industries. And the third point is there are many technologies that can potentially address some of the pain points experienced by the current operators. And I'm referring to technologies like mobile, big data, machine learning, as well as DLT or blockchain, as we see in detail today. And the fourth point is, again, we covered this partly before, but insurance industry hasn't digitally transformed unlike other industries. So that's also giving us opportunity to change. And for all these four reasons, we can say that in the coming years, we are going to see more action in the insurance industry when it comes to application of digital technologies. Okay. Now, with that, we will try to define blockchain as a technology in the context of insurance industry. Okay, blockchain or DLT, distributed ledger technology, is a buzzword now, and we can see traction not just from financial industry but various industry domains. And the most common attribute of blockchain is the transparency it actually offers, and the kind of and its ability to eradicate the central intermediary in various business transactions in various domains that we operate. But here, in the context of this session, I would like to use the definition that you can see in the slide, which is, it is a shared and immutable record of digital events that can offer an acceptable and common version for the participating entities. Here, the two keywords are, one, shared and immutable. It's offering a shared and immutable record of digital events and an acceptable common version of the truth for the participating entities. So this is giving an opportunity for different parties to collaborate and exchange their digital transactions and still agree on a common version of the truth. And that's giving us an opportunity to actually reduce the reconciliation process for the participating entities, and also give them an opportunity to agree on a common version of the truth and then proceed and progress with their transaction. We know that when different parties try to talk to each other, we facilitate some kind of system integration in place to make that happen. And DLT or blockchain facilitate that in a need to know manner, meaning it will not go for a broadcast type transaction, but it will facilitate that information sharing on a need to know basis. And I would like to consider blockchain as a key milestone in the evolution of B2B integration technologies that has been existent for the last 30-40 years. And the major difference between the B2B technologies that is existing at the moment and blockchain is offering integration at the process level, whereas the conventional B2B integration is offering that integration at data level. If you look at the conventional integration technologies like web services or APIs or even the message queue based integration, all are talking about data level integration. But here what we need is process level integration, such that I can have a common process between two different operating entities. We will go to details of that in the coming slides. But I think for the time being, if you can keep track of these words, one is shared and immutable, and an acceptable common version of the truth, that will be good. Okay, now the next point is how blockchain enable insurance business. Okay, we discussed the definition, we discussed the key attributes that blockchain is bringing to the table. So the point is, when you're selling an insurance policy, what you're actually selling is a promise that the insurance company will help you when you are in trouble. Yeah, and you as a customer will not execute that right until you are in trouble. So unlike other products that you purchase, where you experience the benefit straight away, here in this case, you will not experience the benefit until you are in trouble. Yeah, because of that, you as a customer needs to know what happens from the perspective of the insurance company, or what kind of actions they're taking in order to respond to your troubled situation. So what blockchain can offer you, say from a customer perspective, is it will be able to bring back that transparency back to the system of trust. Here I'm talking about system of trust because what insurance companies sell is a promise. So there is a connection between promise and system of trust, and blockchain has a capability to bring transparency back to the system of trust. That is the point number one. And point number two is, now no modern enterprise can operate in silo. All enterprises are connected. You have to talk to your associated companies. It can be a regulator, it can be a partner that works with you to actually support with some services, or it can be other competing entities with which you need to share some information. So connected enterprise is a new reality, and there are challenges in making two systems in the same company itself to talk to each other. Right? We are technical people, and we are well aware of those challenges. But when it comes to make systems in two different companies talk to each other, that takes those challenges to a whole new level. And we have done that at data level with the API level integration. What blockchain is enabling you to do is to take that to process level. Can I extend the process in my organization to another organization such that I will be able to significantly reduce wait time between these two organizations? If so, I will be able to significantly reduce the efficiency of the process, because I have only one process where there are two or more participating entities. And then apart from that, I will be able to significantly reduce reconciliation effort as well. Because the whole purpose of EDP, the Electronic Data Processing Department, or IT department in the past, was to bring in additional efficiency into the system. And we have been doing that by bringing different kinds of systems to life within the same organization. Now blockchain is offering you, I'll say, a frictionless infrastructure to facilitate that integration between different entities. We will go to the definition of these different entities in the next slide. Okay, so here we will go to the definition of entity. So what is an entity? Here the entity can be two different organizations altogether, like JP Morgan Chase and Citibank, or it can be two different entities within the same parent company, like JP Morgan Chase in US and JP Morgan Chase in UK. Now we know that these two companies needs to talk to each other, and we also know that the IT department is now the toughest job of IT department is to make the heterogeneous systems talk to each other, to make heterogeneous businesses talk to each other, to make heterogeneous processes to talk to each other. And we already saw the challenges of that integration at process level and at data level. Now the key question is, how can I how can I make two different systems talk to each other? How can I remove redundancies, as well as how can I reduce reconciliation when that happens? And how can I create a single source of truth when two different entities talk to each other? Okay, here is the answer. And blockchain will be able to offer a frictionless highway between the participating entities, such that they will be able to share information on a need to know basis. They will be able to share information using a cross organizational workflow. They will and this new system, this new frictionless highway that blockchain system will offer, will be able to eradicate duplication of processes on both sides, and it will be able to offer a consistent view of data for all the participating organizations. So in this regard, as technical people, we will be able to view blockchain as a piece of middleware that facilitates sharing of business logic between different organizations. As we already saw, this business organization can be part of the same legal entity, in which case it can be operating entities of a global multinational company, or they can be the same they can be different legal entities, different business organizations working in the same business domain. For example, in a region or a country, there are different banks that are operating and they need to talk to each other. There are different insurance companies, they need to talk to each other. Or an insurance company needs to talk to the regulator. I need to keep in sync with my regulator in terms of supply of data. So all this can be facilitated by a blockchain-based system. With that, we will go to the next slide where Nakib will take us through how blockchain will be applied in the context of Takaful insurance. Over to you, Nakib.
Yes, I was unmuted. I was muted. Sorry. Okay. So basically, there is a problem with Takaful is that majority of the scholars or the people have this feeling that maybe the insurance is prohibited in Islam, or it is against the rulings. But in fact, the thing is, insurance or Takaful or cooperative insurance is as we call it, it is allowed or permissible only within the boundaries of Sharia. We already mentioned in our previous slides, like what are the criteria, what are the differences between a conventional insurance and a cooperative Islamic insurance. So how blockchain will help in this area is usually, like all the insurance companies that we have, in fact, me being in Saudi Arabia, we have different companies like Al Raji Takaful, we have Tawunia, we have MedGulf, like we have many insurance companies over here, and they have their own Sharia board. They have their set of scholars who form the Sharia board, and they write a set of rulings, or they write a set of policies governing this entire system of insuring the people and the people benefiting from the insurance. So they write a set of, they are basically like a governing council. So how blockchain will enable and help this being transparent and make sure this being helped is, all of this have to be written in a smart contract. Now, smart contract is basically for people. Okay, let me take a vote. Can you guys raise a hand? How many of you are aware of what a smart contract is? Like just raise hand button. I can see there are like 30 participants and anyone, guys? What is a smart contract? There is no raise hand button. There is a raise hand button. Okay. Okay, no problem. So we will. Smart contract is basically it's a self-executing program. It's not a contract like the contracts we see for the, in a technical language we can say like it's a self-executing program that runs on the blockchain. And as Sunil already explained in his previous slide, the core property of blockchain is immutability. Immutability means that once you write anything in the blockchain, it is there forever. It's there for eternity. You cannot change, you cannot delete. Okay, so smart contracts are basically small self-executing codes that you put it, you write it in a file and you put it on the blockchain and it executes. Okay, so how the insurance companies will make use of this is that there is this Sharia board, there's the council over there who gives us a set of rulings or policies according which the company has to function. Okay, so all these rulings they put it in a smart contract and they load it on the blockchain on which this entire organization is built. So what happens is that there is no chance of the policies being changed. For example, tomorrow there is a bad actor in the organization. There is somebody who is taking bribe, or he is not honest to the policies, and he's trying to change the policies, which may again be against the policies of the company for sure. That also may be against the policies of the Sharia, of the set of rulings that the scholars have paid. So what the smart contract will do is that it will ensure the integrity of the policies. So there are three aspects in the Takaful. One is the fund, one is the contract, one is the operator. So what happens is that there is this smart contract, or chain code as we call it. Smart contract is basically a technical term that is used on the public Ethereum blockchain, and chain code is used on the enterprise blockchain. You may call it as a smart contract to be self-explanatory. So what is done is, I cannot see the full screen. Okay. So what is done is that the policy holders, they agree on a guarantee, and they make sure that this guarantee is recorded. This fund that they collect from the different people, this fund is recorded on the blockchain. For example, now there is a requirement of $100,000 for a specific person in the community. So the entire community gets together to chip in the fund, forming a cooperative society. So this contribution of fund is recorded in the blockchain, so that tomorrow there is no bad actor, or there is no dishonest guy who actually says that no, I did not pay $10, I paid in fact $1,000. So the concept of the fund, it's written on the smart contract, on the smart contract, and put it loaded on the blockchain. And based on this fund, the contract is created, which is again written on the smart contract. Because as I said, the smart contract, the concept of smart contract is to automate the flow of funds between, to automate the flow of rulings between different organizations. Like also Sunil explained in his previous slide, that there is a problem when organizations exchange data with each other. Let it be between organizations within the company, and maybe or companies across different geographical boundaries, and maybe also companies, branches of the same company but located in different cities. So there is a serious problem of trust. Even for the company where I work, we have seen that there is a problem of trust between organizations within the company itself. Although the data belongs to the company, but one department does not trust the other. So this data provenance is a big aspect which can be taken care by the blockchain, and which can be easily removed, because the concept of trust and the concept of the data being tampered. So these kind of doubts are removed when we are actually using blockchain. Okay, so this Takaful contract is written, and then we have this Takaful operator. So what is a Takaful operator is that how the blockchain will help in this area is usually in a standard in a traditional insurance scenario. What happens is that there is this operator who basically acts as the middle person between the insurer and between the insurance between the policy taker and the insurer. So there are a lot of fees, and there are a lot of time that gets consumed between the execution of these different policies between these parties. So what happens is that there is this escrow amount. Escrow is something like it's an old term. It's not exclusively related to the blockchain. So what happens is Sorry, I got muted. Okay, so what happens is that when we have added this amount to the escrow and loaded on the smart contract, so the smart contract executes the transfer of funds when actually the conditions are met. So it prevents the the time that is consumed by the middle person, and also the amount of fees that is taken care by this middle party. So all these things get eliminated. So this is where I mean, the usage of blockchain, it speeds up the process and it brings complete transparency in the system, which is actually brought to bring which is introduced to bring trust, as Sunil already explained in the slide. Okay, so we need to move to the next slide.
Yeah. Am I audible now?
Yes. Yeah.
Okay, good. Thank you, Nakib. So thank you for that detailed explanation of the concept of Takaful in the context of blockchain. Here in this slide, we will relook at some of the concepts that we have seen when we try to define blockchain, and we will also try to understand how these concepts are deployed in insurance and how they are solving some of the specific problems within insurance. Okay, one common concept, one common theme that we have seen in many of the previous slides is single source of truth. Blockchain has a facility to offer single source of truth, and this is something useful for you to eliminate discrepancy and reconciliation. As we saw before, this can be between different operating entities under the same group, or this can be different between different organizations within the same industry, but it will help you to streamline the process. The second is this will help you to reduce the friction between two different operating entities who might be competing each other in the same marketplace to collaborate, because now both got a common version of the truth to accept, and they both agree on that common version of the truth. Now, it also helps us to increase the transparency, and this transparency will again help us to improve the overall efficiency of the process. So this has applications in reinsurance, in duplicate claim detection, as well as international captive insurance. And in all these three use cases, we can see that different entities needs to come together, collaborate, and then they'll be trying to solve a common problem. And what I've seen frequently is, irrespective of all the technologies that deployed, when it comes to collaboration between different operating entities, we still rely on Excel and Outlook. And sometimes a problem that you can solve in minutes will take weeks, if not months, to actually solve using Excel and Outlook. So that's the dimension when it comes to single source of truth in insurance. The second key attribute that we have seen repeated is immutability. Immutability means technically once you created a record, you will not be able to alter it, but you will only be able to create a new version of it. In a business like insurance, which is in the business of selling promises, trust is a key factor. So if we can create a trusted auditable history, that will help us to increase the trust between different parties who are in that marketplace. And this will also give us access to better data quality, and this data can be deployed or this data can be given to better data analytics techniques, and that will help us to make better decisions. And of course, I can give use cases like claim fraud detection as well as seamless claims processing as examples of this property. The third attribute is already covered beautifully by Nakib, is smart contracts. As Nakib already said, smart contract is a piece of code, and I will also consider it as code in law. Basically, it's an agreement between different parties, and we have seen that insurance is also essentially a contract. So this also helps us to build transparent B2B logic that is agreeable to both parties, so that the chance for I'll say disputes are significantly low at a later stage of time. And this also will help us to put in place straight through processing, which is applicable say in areas like claims processing. An example that I can give that most of us can relate to is um, uh, is flight delay insurance. Okay, flight delay is an information that's available in public domain. So as a customer who got travel insurance, if I am eligible for travel insurance due to flight delay, I need not actually create that claim. I need not raise that claim, because that information, that flight is delayed or not, is available to the insurance company. So they should be able to automatically put in place a straight through processing of that claim, and then money will automatically will get remitted to my account. So that's an example of how you will be able to put in place smart contracts to facilitate straight through processing in insurance. And the third area is the potential to create new markets and new operation potentials. And here I'll say that the sky is the limit, and here we haven't even thought about all the possibilities. And the maturity of blockchain, I will consider at this point of time, I will try to relate to the maturity of internet maybe in 2000, because internet was at that point of time perceived as a platform to share things, platform to share content. We were not successful in seeing the kind of business models that we see today. So I'm thinking that in this particular area, or the new market potentials that blockchain will open up, is limited only by the imagination of human mind. Some of the key use cases that are close to my heart. Okay, one is tokenization of assets. We all deal with different types of assets, but most of them are not purely in digital form. They are translated to digital form. And tokenization is a technique that will help you to create digital assets. And here you can think about digital currencies, which are now is a serious consideration by various federal banks around the world, various central banks around the world. I was told that the Central Bank of France is considering to release 20% of all their new currency in digital form. And this is also will give us new, I'll say, operating potentials. And I think another operating area is bond market. We know that the bond market is a multi-trillion-dollar market, and there also you have an opportunity to streamline bond life cycle through the application of DLT. So I think with that, we will go to the next slide, which will help us to understand how to make blockchain real for business. So far, we have been talking about what are the features of blockchain, what are the features of blockchain applicable to insurance and other domains, but we haven't seen how we can make it real. Here, we are looking at it like say with an architect mindset. Okay, because we are technical people and we should be able to realize technology, and so many people are talking so many good things about this technology, but how can I make it real in my organization? How can I bring some value to business? For that, we should have some realistic understanding of how the organization's technology stack is structured. If we look at the Gartner space layered architecture of a typical organization, this is not specific to insurance, this is applicable to any business domain. You have the systems of record, where you can consider where you are keeping your core business transactions. And in insurance world, you can relate to policy systems, claim systems, etc. Then on top of that, you have your systems of differentiation. So what is the extra value that your organization bring compared to other organization? Here you can think of workflow and process optimization systems that you're putting in place on top of your systems of record. And then on top of that, you can think about systems of innovation. Here I will refer to telematics systems and analytics systems, big data systems, IoT systems, where you will be trying to create new market potential, as well as you will be trying to improve efficiency of your existing system. Here, the truth is your systems of innovation, which is where the blockchain will fit in, will not be able to replace your systems of differentiation or systems of record in one shot. Meaning, the new applications that you will be developing in blockchain or DLT or in any of the disruptive technology will be practically covering only maybe 20% of your end-to-end customer journey. You still need your systems of innovation and systems of differentiation in order to facilitate the full customer journey fulfillment, which means that when it comes to blockchain realization in any industry, including insurance, the system integration should not be an afterthought when you look at it from an architect's perspective. Your new system should be able to talk to your claim systems, your policy systems, your billing system in order to make the business run, in order to derive value to the customer. So one thing that I have seen frequently is people attempting to offer a blockchain solution on its own. I think you should look at it, you look at blockchain as a piece of middleware. Even in this diagram, you can see that blockchain is offering a piece of middleware for one participating organization. In fact, for other participating organizations, they still need to facilitate this integration to other systems of record respect to their organization. So I think in this context, I will reiterate that blockchain should be perceived as an evolution, a key milestone in the evolution of system integration technologies. With that, we will look at different blockchain business models available to us. Here, when I talk about different business blockchain models, this is in the context of private blockchain, and I'm not factoring in Bitcoin type public blockchain in this context. Yeah, and one common model is founder-led network. Here, I am creating a new network, and I'm inviting other parties. An example could be JP Morgan Chase is creating a new network as a group, and then it's inviting its partners as well as its local entities operating in different geographies to that network. That is an example of a founder-led network. The second example is a joint venture network where two equal partners are coming and then they're creating a network. An example could be, say, example Citibank and another bank in US is coming together and creating a joint venture network. They are equal partners. They got equal rights in the network, and then they will be inviting other partners which are relevant to them to that network. The third business model, which is very prevalent now, is consortium network. Because irrespective of your business domain, be it insurance or bank, there will be other players in that business. When it comes to insurance, say example in US market, you got AXA, Aviva, Novice Union, you got MetLife. There are different players. All these players will form a consortium because they also got different common problems to solve. In Europe, example that I can give is B3I. B3I is a consortium of around 16 insurance companies as well as various participating organizations like brokers. They come together and they create a network. And then this network is responsible for facilitating that frictionless infrastructure, for the frictionless middleware that facilitate that participating entities to share information on a need to know basis. Here, need to know is important because I'm not talking about a broadcast. I'm not talking about an information share where whatever I'm putting on the network is available to all the participating entities. No, that's not the case. I, as AXA, would like to share something with Aviva, then that is on a need to know basis. Very important. And I'm seeing possibility of similar network in other geographies as well, where we can, and I see that could be one potential growth opportunity for blockchain in other geographies. And this is not something as we can see now. Here, the fourth model is business ecosystem. Here, different network models are coming together and then they are operating. Here, this will lead to new business models as well. For example, you can consider a network of banks and network of insurance companies coming together and then creating a business ecosystem. You can also invite, for example, the airline companies to the network so that you can facilitate straight through processing of travel insurance. You can invite travel operators to that network and facilitate travel insurance in a seamless way. So this is how business ecosystem will operate. But I personally believe that the technology also needs to mature beyond its current maturity level to facilitate business ecosystems. Okay, now this is my last slide, and here I will be talking about how to facilitate enterprise. What are the enterprise adoption consideration when I talk about blockchain adoption? And here I got two dimensions. One is IT dimension, one is business dimension. And we will discuss both. So from an IT perspective, these are very straightforward points. I need to make sure that my technology stack is proven. Now, when it comes to financial industry, the proven stack is either R3 Coda or Hyperledger Fabric. Then it should be able to talk to my legacy system. I cannot leave my legacy systems behind. So it should have strong system integration capability. It should be able to meet my non-functional requirement. Can it operate in the cloud operator of my choice? Can it scale up and down based on my requirements? Then it should be able to interoperate to other blockchain networks if required. But I would personally consider interoperability as an aspirational requirement. Now, from a business perspective, identity is key. I need to know whom I am transacting with. I need to know the KYC of the party that I am transacting with. And I should be able to do transaction based on selective endorsement. I should make sure that I am transacting on a need to know basis. I need not endorse all transactions, but I will be endorsing only those transactions that are absolutely required. And then selective data sharing. I should be able to share data only to those parties who are required. And then the technology that I'm choosing, it should not be a cowboy style technology. It should have market presence and it should have market acceptance so that I will not get a negative reaction in stock market because I have adopted a blockchain technology that is seen as a cowboy by the market. Yeah, so that covers both IT as well as business segment. And I think with that, we will open up for questions. With this note that I see tremendous potential in DLT or blockchain technology in driving simplicity as well as in driving process simplicity, as well as establishing a frictionless highway between different participating entities in the same marketplace or in different geographies. And I'll say that the opportunities are limited only by our imagination. Thank you, and open for questions. Over to you, Nakib, as well as moderator.
Yeah. Okay. Walid has a question about which blockchain basically fulfills the kind of criteria that we mentioned in the previous slide.
Okay. Here
actually,
I will not.
Yeah. Okay. Okay. Sunil, you can take up the question.
Yeah, thank you, Nakib. Here, I will not endorse any particular blockchain technology per se, but I will say that, okay, when it comes to financial industry, Hyperledger Fabric and R3 Coda has maximum acceptance from the community. And if you look at the market adoption, you can see maximum traction for these two blockchain technologies.
Yeah. To add up that, I would like to say, like in the year 2020, R3 Coda has been projected to take over Hyperledger Fabric in terms of adoption towards the insurance sector especially.
Okay. Yeah, I agree with that.
And regarding the Walid, your question regarding the product that has been in the Takaful sector, yes, even IBFNet is working on a similar product, and the details of which we will release out on the website very soon. But apart from that, Indonesia and Malaysia, these are very good markets for these kind of products based on Takaful insurance. And there are a lot of startups and there are a lot of government initiatives that are already working on them. Okay, Sunil, there's a question from NK. What is the motivation for competing entities to have a single source of truth? What is the benefit of them sharing this data among themselves?
Yeah, that's a very good question, and I think if you look at insurance industry in particular, there are lot many problems that uh, 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 that an individual company cannot solve. For example, if you look at catastrophe insurance is not under the control of one company, but we would like to have some synergy between different companies, and there are different types of insurance transactions like subrogation, where different insurance companies need to transact each other. At the moment, these transactions are happening out of the network. I will say mostly via Excel and Outlook, and there is a lot of interest for both companies to make sure that I can make this happen within an agreed common network. And last but not the least, even for uh, uh, the different operating entities under the same company, like a global MNC which has different operating entities. Here, there are valid reasons for these operating entities to not to trust each other, but still they need to transact. That's also a valid use case for DLT to take a key role. Hope that answered that question.
Yeah, there are a set of 3 questions that is from NK. I can see. I think NK, your questions have been answered already in the slides that preceded your question. If you still aren't clear, just put it on the comment if you didn't get an answer to that. And I think Walid also answered one of the questions to you. Yeah. Okay. Baiju, regarding a question like how smart contracts work across various legal frameworks, like as Sunil already mentioned, that the main reason the main area where blockchain is benefiting the organization is towards inter-organization trust, when we are actually exchanging data or exchanging information between different organizations or different legal frameworks. Okay. But if you're talking about the technical details, like how data from a third party is getting into the blockchain, that is a different discussion altogether. That is done by the help of oracles, and that's a different discussion altogether. Maybe we'll cover it in some other seminar, like how data is taken into a blockchain from third parties, and what are oracles.
Yeah, Nakib, if I may add a few more points to what you just described, I think legal frameworks and smart contracts, they need to work together. Assuming that by legal framework, you are referring to different legal systems. And what we are seeing, I think as of today, we cannot consider code as law, and we don't have lawyers as coders. Yeah, but what we would like to see in future is actually synergy between these two areas. We need to understand, we need coders who understand legal domain. At the same time, there should be legal sanctity for code, and that's the direction that we are moving. And it's not just in insurance industry, and I believe that that's a common industry trend. But with that, I think for that to happen, it's not just a technology change, but it's a regulatory change as well. We know that the regulators move at a slower pace than technology companies and technology changes. So that's a positive change that we are expecting from the regulatory systems around the world in the near future. Hope that answers that question.
Yeah, there's one more question from NK. Could you share more about the cost involved and the time taken to build blockchain tech for insurance companies? NK, actually, regarding your question, it is a very good question, I must say, and it's one of the starting points when we are designing any use cases. But then again, the cost or the time or the infrastructure, the resources, these are all related to project planning and infrastructure planning. So this is different for different use cases and differs from industry to industry. So if you come up with a use case and you ask me a particular question, then I may be able to answer you in precise. But giving you a general answer, the cost and the time and the amount of resources that goes into building a blockchain ecosystem or a blockchain solution doesn't have a single answer.
Okay. Yeah. I think that's a very valid statement, Nakib. But if I may add on, I think if you go back to the pace-layered architecture strategy from Gartner, you will see that most of the disruptive technologies are in the topmost layer, which is innovation layer, and my recommendation would be to pick up a use case that will coexist with your innovation layer as well as your core system layer. Don't try to implement something that directly disrupt your system of record or system of innovation, but try to pick up a small use case, then gain maturity within the organization, try to demonstrate value to the stakeholders, and then try to attack bigger use cases.
I think that is okay. I think we are up for the time as well. We are past 5 minutes more. I think we can take up more questions. Guys, in the speakers page, you have Sunil's contact and my contact as well, my LinkedIn contact. You can always get in touch with us. Anytime, we will be more than glad to answer. If we know, if we don't, we'll find out the answers for you. And maybe we'll learn from each other, because like this technology is in a nascent stage and all of us are learning. Nobody's a master, nobody's perfect. So there are a lot of things that we need to learn from each other. We'll try our best to answer you, and let's see how we can, and based on your questions as well, it will help us to plan our upcoming webinars. So please don't hesitate in asking questions, and the admin will post the slides and the recording of the presentation so that you can view it later on.
Yeah,
so that's it from us, and thank you so much guys for joining us, and be safe, stay at home, and hope to see you again soon. And please don't forget to connect me on LinkedIn. I'll be more than happy to get in touch with all of you.
Thank you very much. Thank you very much, Nakib, and thank you very much all the participants for taking your valuable time from your weekend to actually spend with us. As Nakib said, every interaction is an opportunity to learn, and that is very much relevant in the field of emerging technologies. So stay connected, stay networked, and that's the only way we will be able to crack problems in the industry. Nobody is a master, and at the same time, technology is also in its early stages. It is very much possible that you will be able to make a significant contribution to mature this technology and take it to the next level. So together we will learn and collaborate and make this a Meta DLT community. Thank you.
Thank you so much, guys. Well, thank you, Sunil. Thank you for joining us.
Thank you. Thank you all.